Bing bang boo. Happy days. Well, good morning, guys. Hope we're all well. Can I just have a sound and visual check? Just somebody drop in the check. Not everything's okay and you can hear me. Check. Result. Thanks, Philly. 10-4. Happy days. Happy days. Okay, boys and girls. See, there's quite a few of us in this morning. Finny, there's a shocker. Screwed, Huey, John, Jason, Liam, how you doing, me old cocker? SRV, great that you're here. Shane, is it Rubathton? I really hope I haven't butchered your name there. Hello, Fred. Eric, glad you made it. How's Cyprus? And Charmaine. Hello, Charmaine. I think this is your first one here. So a very warm welcome to you. Okay. And Gilbert's just snipped in. Happy days. Okay. Good stuff. Good stuff. Well, what we're going to have a little chat about today is mainly prop. Okay. Go through. Well, there's Yanis. Hello, Yanis. Enjoy the pool this morning. You get that you are. I hate him, you know. He's young and handsome and fit. And now he's in pools and beaches every day. I hate him. No. Fair play to you all. Fair play to you all. Right. Okay. Carry on. Prop. Prop over the last couple of years is becoming massive. And it's heavily advertised. And there's Pete. I can't miss him out. And Andrew. Right. And it's advertised in such a way that it can suck you in, thinking it's an easy route to riches. And that's what the general gist of trading is. It's always sold on the glamour side of it. However, the bits that is missed out are the rules involved, the emotional content. Hi, Charlie. The emotional content and the actual riches, because they will highlight the big figure, but it's like any other job, and trading to me is a job, and you hear me say it over and over. Do you come into any company not knowing anything about it as managing director? Well, of course you don't. You start at the bottom, you learn your craft, and you work your way up the ladder. Now, that's what prop does for you. You get a small fund to start with, and you work your way up the ladder. Right? But some people don't understand that. But there are ways that you can successfully navigate the world of prop trading. So I think the first thing we're going to do is we're going to go break down prop, and I'll show you a mindset of how to pass it by breaking it down. I'll keep an eye on the chat for your questions, and we'll try and keep it as interactive as we can. And I'll answer any of the questions about prop that you have, and in my strange way, shall we say. And then over the course of the next half an hour or so, you might have a little understanding about the frameworks behind it. Is that all right? Everybody happy with that? Yes? No? Indifferent? So let's have a look, see where. Well, that's correct, Yanis. That is one of the first questions you have to ask yourself. Because if you're, hello, Dame, hope all's well at your house. If you think of prop as a job, trading as a job, ask yourself, would you employ you? Look in the mirror and say, would you employ me? That'll tell you your personality, because I know Joanne. She's tried trading and she's trying her hardest with it, but she can't get her head round it. She genuinely can't, because of like the emotional roller coaster she goes on. And I asked her the same question. I said, would you trust yourself to do this? And she said, no. So that answers a question. She's not trained well enough yet. She hasn't had the experience to undertake it. And when you're looking at prop funds, you have to be on your A game before you start it. So you have to know what you're doing. And I think this is one of the pitfalls of the industry, because it's deemed, well, just come along and we'll just give you a couple of pointers and away you go. Give me 800 quid or whatever it happens to be. That's the business model. The business model is taking the 800 quid. They have a fair idea you're going to fail. All right. And for the ones that do pass, well, they will go on to successes. Case in point, I'll show you. There are some newer people here. I have been personally on the journey of my company of choice, which is the 5%ers. And I'll explain company of choice as we go through. Now, I didn't do this once. I did this on a number of occasions. There's a second challenge. There is a third challenge, and all of these have paid me well. And I've recently just completed a bigger challenge here. Okay. And then I've worked my way up the corporate ladder, if you like, to earn the right to trade a big fund. And there you go. All right. So what sets me apart from Joe Blogs? I knew what I was doing. So when I invested into this company, the monetary value up front, and we'll go through this, bear with me. Here we are. The monetary value starts, well, there, either 85 or 235. So if you know what you're doing, that amount of money is negligible. It's tiny for the gain you'll get on the other end. But if you don't know what you're doing, then it becomes a bone of contention. And that's where the argument and everything comes from about prop. Because you've got newbies coming in who don't know what they're doing. They take the challenge, they fail, and then they feel victimized. When actually, they shouldn't have took the challenge in the first place. They should have been educated. Go through paper trading. Do the 30-day challenge, as I constantly keep banging into you guys in the squad. You know, if you're unsure, if you're not making money, do a 30-day challenge. And a 30-day challenge is very simple. One trade per day or per trading session if you've got an itchy finger. But it's one trading session, so that's either London, New York, Asia. So in 24 hours, that's 3 trades. All right, and if you can stay awake that long, good luck. I can't. I can do 2 sessions and then I'm knackered. Right? At the end of the 30 days, you have to assess what you've done, because you have to journal right through. If you are in a positive expectancy, you followed the rules, 1 trade per day, ended in positive, then you have earned the right to take on a prop fund, because you've shown your skill set and you are comfortable in well, you're just comfortable in what you're doing, I guess is the easiest way to look at it. If you failed that 30 days, in other words, you might have gone, well, I'm seeing another setup here, I'm going to take that one as well. Even though you went positive, you've actually still failed. What that's doing is it's giving you sort of the framework in your mind to follow rules, because that's what prop fund's all about. It's about rules, because it isn't your money, it's somebody else's money. So effectively, we go back to the first question. Would you employ this person? That's what prop funds are trying to do. They're trying to figure out whether they will employ you. And the only way they'll know that is through your skill set. Would you let somebody loose in your business who doesn't know what they're doing, but it's going to cost you a lot of money? Because I'm sure I didn't in mine. And for me, that is common sense. Does that little monologue make sense? Do you understand where I'm driving at here? because I know I can get on a tangent from time to time. But what I'm trying to do is get it into your mind that trading is not get rich. Trading is about working every single day. Now, how you apply yourself is the next step. Now, for me, you hear me talk about planning and homework constantly. I do nothing unless I've planned it first. That's what my sheet is all about. What that is a filter. It filters down something that I can see to cut the noise out. When you see me do a bias, it is exactly the same. It pushes it down. Okay. And I've just noticed in the chat there, Charlie said prop firms scare her because she feels she couldn't do it while working 9 to 5. You can, as long as you've planned it. And this is something that I'm going to go through now. So just as a quick exercise, all right, let's have a think. Right, you've got your own funds, you got prop funds. All right, you're watching me do Morningstar. Started with shade over 300 quid in March, but a couple of meals out of it. It cracked 750 end of last month. I've taken it out. I've had a bit of good time with Joanne, and I'm starting it again with, I can't remember what the balance is now. I think it's about 250 quid now. I've taken some money out. But that's a few months, and it's still only that big. It's just a tiny wee account. But it's paid me, and it's given me some benefits. If I wanted to expedite that process and have it quicker, then the original fund that I was using could be put into something like a prop. And then as long as I understand what the rules are, and this is part of the process, it's understanding the rules. And some people don't. I mean, let's kind of put this on another spin. 2 years ago, when all of this started, I don't think Volker's in today, but I do touch base with him regular. Volker came to me and he said he wanted to try the 5%ers. And he said he was really interested in it and he thinks it's top notch. Now, at the time, I had no desire to trade a prop. None at all. Right? I thought it was the dumbest idea in the world. All right. 2 years on, I am kind of on the fence. I think there's a difference between a prop fund and a proprietary fund. Now, the 5% is a proprietary fund, all right, true proprietary fund. It's they take you from the challenge, and when they give you a fund, they make money off that fund as well. Then there's others out there. There's Blue FX, FTMO, or Audacity, and they all contact me regularly to promote them. And I've shown you the emails, and I've always said no. And the reason that I say no is, one, my soul is not for sale. Whenever I say anything, I've either done it, gonna do it, or I know it's fact. All right, I've got to believe in it. I don't believe in them. All right. When Volker came to me and showed me the 5%ers, their ethos is slightly different. Yes, there are challenges that you have to meet, and there are criteria you have to meet. However, the rules that they have in place, because I went through the T's and C's, I spent an entire weekend and I read through them, which is why sometimes you lot call me a book nerd, because I do go through this sort of crap. All right. And it's kind of why when you talk to me about signals, I know the legal implications behind them, which is why I'm dead set against them. But anyway, cut long story short, what I found was the rules were fair and they allow me to trade my way. Now, I'm not sure what the rule updates are on FTMO and things like that, because I haven't seen it for a while. But at the time, you had to pass within 30 days. Well, that's a red flag straight away, because that time limit is too much. You know, it's forcing pressure. And you had to achieve certain milestones per day as well. You weren't allowed to trade the news. Carrying the weekend was a bit dicey. All of these different things. So it was basically setting you up to fall. When I looked at the 5%ers, I've got a long time limit. In fact, let's have a look. We'll look at the instant funding rather than go right through everything, okay? So if we work this out, you have 180 days to pass. That's, what, 6 months? Right. If you can't turn sort of 1% per month over 6 months, well, you shouldn't be trading it in the first place, okay? And that's the same as your own funds. You know, you should have a benchmark that you're working to, okay? They put in 2% stop loss required. People kick off about that. They go, oh, it's too tight. It's not. It's there for a very solid reason. Protect the asset. And if you've sized appropriately, that stop loss is actually quite wide. So that is incredibly fair. Then the next person will go, oh, well, it's only 1 to 30 leverage. Wrong with that? You know, I follow ESMA rules. That is pretty high for ESMA. My personal account is not that high. Okay, so it's you start building a picture, and what happens is you're looking for excuses for failure, and you're looking for excuses to point the finger, because nobody ever takes ownership of their own problems. You know, I failed, but it wasn't my fault. Well, it was your fault because you pressed the button. No, it wasn't. It was the company's fault because leverage was too tight. Well, not really, because if you're using leverage against a very small drawdown, then you set yourself up for a fall. So I look at passing prop like this. This is the first thing I would do. If I'm looking at this, okay, the first thing I would do is go, what is my maximum drawdown? And I wouldn't recommend the aggressive style. Why? That. Too tight. Okay? Way too tight. When you're looking at something like this and you start breaking it down, excuse me, I need a drink. Still under the weather from the other day. Your first thing you want to look at is this bit. All right? I need to achieve 600 quid. So you know what your benchmark is. Okay. So what's the next part of it? Well, you need to know what happens when it goes wrong. Just the same as any other trade. Well, this is minus 600. Right, so I've got 600 quid for it to go against me before I lose. Or lose the account, rather. Right, okay. So that there is actually your account, not the 10,000 instant funding. You're working on 600. And what you have to do is, well, is pull in your 6% or effectively double the stop loss in 6 months. It is possible. And I've just shown you stats that show it. Okay. This bit is not the worry when people are talking about leverage. You have the buying power because it is there. Because if you're sizing appropriately against 600 quid and you're using that just to open up the fund or open up the position rather, you're good. And then you have 180 days to do it. Well, let's have a look. See where this gets us. Because there's a very good website that I use. It's this one here. It's called Time and Date. Okay. So if you go, what is the date in X amount of days? Well, if I say entered that in today, and I'm saying 180 days, what's the date? Well, that gives to the 10th of February next year. Loads of time. Loads of time. Right, well, let's break this down again. Okay. So from here to the 10th of February, and we're going to exclude holidays and weekends because we need to know what we have to achieve per day that we can be at a chart. It's 126 working days. So you've got 126 working days to achieve your figure, which is 600 quid. So let's get a calculator. 600 divide by 126 is £4.7 a day. Okay. So if you want to pass this, and we come back to sort of this here, this doesn't look that daunting anymore, because all you need to do is work on £5 a day, £5, right? Well, what's £5? You can do 10 pips in a day at 50 pence. Not only are you achieving your day milestone, you're also achieving maybe a little bit of percentage above your day milestone, which will add up and start taking days off the other end. So the whole process of what I'm trying to get to is break it down to its smallest component. And to pass this, it is £5 a day, just £5. Now, is that not a better way to think than just go, right, well, it's £600, I need to do it in a month? Treat it as a job. And what's the job of a prop trader? It's the same job as anybody. If you're a city trader, okay, you have floor traders. Not that you see them anymore, but it's a kid, all those that are waving the flags, it's now behind a computer. They're effectively day traders. And you also have asset traders. Now, an asset trader is somebody who trades one asset, and that's all they do. But above them is what's called a risk manager. And a risk manager gives them the parameters in which they're trading in. In other words, they're saying, you cannot risk X amount or invest X amount into a trade. Well, that's your stop loss. Okay? We are expecting you to generate X amount of growth. Well, that's your target. And your performance review is the time measurement. That is the days between them. You know, I understand all of this because when I worked in the medical sector many moons before my own business, it was done exactly the same. And when you're in account management and certainly trading, whether it's prop or your own funds, you are only as good as yesterday. You know, and that's why this industry is very hard, because every day you've got to be on your A game. And if you're not on your A game, well, you're going to pay for it hard. And the way that this industry works, takes money off you rather than pays you. So ask yourself the same question. Would you employ yourself? I'll open it up. Let's see if some questions. Okay, let's have a look. See where we're up to. But I hope it doesn't scare you, Charlotte. I genuinely do. The way around this is just all in your planning and your homework. Now, I touched on asset management as well. Now, when I'm talking about asset and you're looking at this, I mean, this is quite frankly a fantastic program for one reason. We're allowed indices in them now. However, when you're looking at the small, if you get this bit, the 40k, it don't matter what you trade. Genuinely doesn't. Right? Because you've now got a big bank balance to ride waves out. Okay? When you're down here, the asset is important because you can trade gold on this. You can trade the DAX on this. Would I trade gold and DAX on that? No, I wouldn't. Why? They are too volatile. And they can move 100, 200 quid against you with a 50p positions in a day. Too big. All right. So what you do is, if you like looking at sort of an indices, my suggestion is look at It's three elements. One, indices. It's correlated FX. So if you're looking at the FTSE, look at cable, okay, because the two of them are correlated together. And then a commodity. Now, gold is very quick. If you understand gold, great. But personally, I would drop it back into silver. It works roughly the same, but it's not as brutal. Okay. So again, when you're working your way down the rabbit hole, you're having many hats on your head. You're the floor trader, you're the asset manager, you're the risk manager. And ultimately, you're the general manager, because you've got to make the choice in the first place. And it always comes back to doing it as a job, not the money. Because think about it. If you were doing a job that you truly loved, why'd you do it? Do you do it because you paid well? Or you do it because you want to do it? Like say you love animals, so you're going to be a vet. Is the money the driver? No. It's just the byproduct of doing something you enjoy. That's what trading is to me. It's why I don't care about the monetary value of them. I enjoy the process. And I just so happen to be paid for enjoying what I do. And because I enjoy it, I do it well. Because I do it well, I'm successful at it. And I reap the rewards. Hope that makes sense. Let's have a look, see where we're up to. Okay, logic, that's all it is. It's like anything else. You're an Olympic trainer. You get a kid off the boat, never really trained fully. He's got to go through the whole process, build up his strength, or her strength in this day and age, till you get to the game. Simple stuff. Same. See where we're at. Getting it now, Liam. Good lad. See, who says you can't teach old dogs new tricks? No, it's not as bad, Charlie. It really isn't. Trading itself is not as bad, to be honest. I think the problem with trading in general is the hype that is around it. It's always the sort of quick money. It's never the process. And actually the strategies, and I've shown you strategies. The problem is you can get too hung up on a strategy because they all work. They genuinely do. What you need to know is understand when to use them. And that's why I try and explain, certainly the way I mark a chart out, just for argument's sake. Like this, you know, it's marked out in such a way that it's mapped. And that makes it easier for me. And if I didn't have any marks, nothing to go on, I'm basically trading blind. So if I was in a job and I was just doing it blind and messing about, well, I get sacked. So the market's my boss. So I have to follow the path. Okay, let's have a look. Super breakdown, look at target and risk. Exactly. Eliminate. John's just hit on something, and I meant to bring that up actually. It's emotional context, and the worst emotion is greed. It's not the fear of missing out. It's not revenge trading. It's greed, because greed will force you to do silly things. You'll overtrade. You'll put your position size on too big, and then once it's gone wrong, that greed turns to anger, and anger is a terrible emotion in the markets. Okay. Yes, Pete, that is exactly correct. Your position, or you kind of look at it in reverse, shall we say. The pot, sort of in that, well, I'll just show you just to highlight where we are. The pot here, because you get it sort of like 10 grand straight away on this. That's your leverage. That's your buying power to be able to open up a position. If you try and position at that size with only a low drawdown of 600, it won't take long to wipe out that account. And as we've just gone through a little exercise, you've got plenty of time to pass this. plenty of time. So you don't have to be massively stupid with your position sizes. Small is best, you know. I break positions, and in fact, in that chart that I showed you, it started at 20p was the average position size, 20 pence, and it went up to a maximum of £1, you know, because I break it in by 5, and that made my life. And that's because I based it on this. And then as each day was getting stronger, I could increase the position size a little bit, you know, just by pennies. And it's amazing how much 5p here and 10 pence there builds up over 180 days. Okay. So yes, you were bang on. You were bang on. Cable is excellent. Cable and the FTSE. The markets that we know personally, because we live in the UK, and you see it in the news all the time, so you're aware of sort of interest rates coming, all that sort of thing. But also it's a good natural product. You know, it moves quick enough to pay you, but it's slow enough that it can't kill you. So that's why I like cable. Yeah, like I say, gold's, you need a big pot to trade gold. It certainly, well, I rephrase that. If you're doing it in your own funds, and like IG, which I use, that's spot gold. It doesn't move very fast at all. In fact, it's very slow. And you can actually put a huge position size on it because it does move slow. However, when it's gold versus USD, it is ridiculously fast. And it'll eat an account in a heartbeat. A bit like the Dow 30. Dow 30 is a nightmare. I've got a big account. You know, you've seen it. I can't trade the Dow. It would kill it in a heartbeat, you know. And then Winky will kill me. And that won't be good. Right. So how much is 50p, 10p? It is 0.05 on lots. Let me quickly, I'll just check that. The rule of thumb is roughly just pull this over. So my netting account. Pull up a new order. There you go. All right. 0.05 is what you're looking for. That's 50p. But it's there or thereabouts. Okay. When you put it in. And then if you go up and sort of like the rule of thumb, one lot is roughly about 10 quid. Obviously it changes from asset to asset, but it's rule of thumb. All the way down to 0.01 is 10 pence. Right, and then you build it up. Okay. Happy days. Happy days. Okay. Millie, that's a new name. Welcome to you, my friend. Watching your videos a long time now. They're very instructive. I have a question. Can you use swing trading? You can. I recently did a webinar for these 5%ers because I do a lot for them behind the scenes. They don't pay me to do it. I do it because I'm on the journey and because a lot of my squad guys are involved. Going back to Volker, that's who got me involved in it in the first place. And then here we are. And because I'm paid quite well from the funds that I have, I feel duty bound to do it. And within that, I use the strategy called the river. And the river is very good on a day chart. So you can set it up each day and then let it run. Now, because they are sort of based on multi-day moves, instead of gaining £5 per trade per day, you may well be having a week's move and you're gaining maybe 15 to 30 pounds, and then it balances out in the time frames. Okay. And the trick with swing trading is because your stops are quite wide, you've got to be really selective with them. Okay. It's just nature of the game. Timing the market at the exact bottom is incredibly hard. And when it's swing trading, it's even harder because you're naturally using bigger time frames. And that next 4 hours might run for the next 8 hours. And what would be normally a 50 stop might end up being 150 stop. So you've got to be really careful with a swing trade. But it's not to say it can't be done, because it can. You just got to be a bit more patient and not be too itchy with your trigger finger. Okay. Yes, Eric, it is. FX is definitely more forgiving than gold. Gold is a double-edged sword. If it's going for you, it is your best friend, because it'll pay you a lot very quickly. In fact, I just showed you that. I did make 20 grand in a month, because I predominantly did gold on that account, but I had a big sort of breadth to work with, you know. So that's why I used it, and it was good. If I ever do this again, and I'll put it to the vote later on in the group, I might do this again and only do it, as I've just said, one indices, one pair, one commodity, and see how we get on. And then that way I've got my rules, you know. My rules are very simple. That's all I can trade. That's all I need to concentrate on. £5 a day. Boom, boom, boom. Look for the best asset on the day. Happy days. Okay. So off topic a bit. Where do we find? Right. Okay. On when they're finished being rendered and pieced together, they'll be put on the 5%ers dashboard, and I should be able to get a copy of them, and I'll drop them into the group. The subjects that I covered, Charmaine, I did journaling. There's a lot in the group on journaling, because I do implore that you journal. It is perfect. Then there's the river strategy, which I did at the end. There's a lot on the river. If you are using the river, my preferred settings are a day chart and a 50. However, you can change the setting to say a 20 if you want more signals, but you're going to get ripsawed a little bit more. And if you want longer holds, you can hold it out by using 100 or a 200. But I'll go through it in the group. Okay. I've started having to buy. Yeah, I know all about that, Charlotte. That's how this started for me. It's long. Whoa, yeah. That was a meeting and a half. Bit of an eye opener. That's exactly what I used to do. That's how I started in this industry. I used to do it two ways. I don't know if you doing forward purchasing or asset purchasing, where you just buy the asset and sit on it, or are you agreeing an exchange rate for X amount of months? I used to do both, and it helped amazingly for cash flow and understanding sort of the budgets for the next 3 quarters. So it was good. Okay, so yeah, it is. You'll find a lot of it in Coffee with Scruff. Shane, hello Shane. I do to a degree, Shane. Certain assets I can't. If I've got a small balance, I can't replicate, say, gold into it. But 9 times out of 10, I am following whatever I do on my wage. Because of the setup I have 3 screens here. I have the one that's in front of me that you see all the time, because that's where the camera is, looking straight down. That's where I do a lot of my work. And because I use pending orders, I don't ever go straight to market. I can easily, if I'm trading cable here, I can easily trade cable over here, you know, because it's just a question of 2 clicks of the mouse. Very, very simple. I also replicate them over into Black Bull, and the guys are trying to get me to use a copier, but I'm still a dinosaur. I do everything manual, and I haven't got that far yet. So at the minute, it's like click, click, click. Right, I'm ready. And then once you are running, well, it's just a question of drag and drop with your orders. So there you go. Happy days. I struggle with lot sizes, hence why I find. Yeah, I had that the other day. There was a guy picked up on me, and he's like going, yeah, it's misleading because you're using 5 lots. I'm like, what? Explain that one for me. And he says, yeah, you did 75 quid and you used 5 lots, so the market didn't move anywhere. I was like, no, I use pound per point, which was set at £5, and it moved 75 quid, and the target was 10 pips, so I was actually over target. If I was doing 5 lots, that would have been £50. So you're right, it is confusing, and you've got to kind of get your head around it. It's a little bit like Eric asking earlier on what the lot sizes are. And the easiest way to work it out is one lot is 10 quid and 0.01 is 10 pence. So 0.1 would be £1. You know, and if you've got it on a piece of paper next to you, it's dead easy to work out, kid. Dead easy. Okay. Well, yeah, I often call it point pip. In spread betting, a movement is called a point. In the Forex market, a movement is called a pip and a point, because 10 pips is 100 points on the 5%ers platform. So, it's just terminology. Ultimately, it's just a movement of price. It's going from this bit to this bit. That's it. I mean, I often call it, when I was working, and I still talk to a guy, calls it ticks. He says, yeah, it's 20 ticks. But what he means is it's 20 pips or it's 20 points, depending on what you're looking at. Sometimes it gets lost in translation. Okay. Forward purchasing exchange rates. It's a great way. We used to do it I used to buy containers in Japan mainly, so it was always sort of pound against the dollar because they used to like US dollars, and we just used to wait. And it's kind of where Scruffy Madness came from as well. I actually liked it when the price went against me, because you can start locking in better rates at X amounts of pounds, and if they weren't willing to do it, well, you could just buy the asset and sit on it. So it's an interesting subject, Charlie. It really is. It can be a minefield at times, but at least you know where you are. That was why we did it anyway. Okay. Right. I'll come back to prop and the way that they are. What they are doing, you need to not think of the money. You just need to think of the process. Now, if you make £1,000 in the account, you will have a profit split. Now, depending on the style of account you have, the ones that they have at the moment are profit splits, and they start at 50-50. So you make 1,000, they get 5, you get 5. And why is it done that way? Well, they're putting the money up, you're doing the work, and you split the proceeds. It's that simple. As you go up the balances, it should give you a list of them somewhere. Growth agenda, profit. There we go. Okay. As you work your way up, they start giving you a better share. But as you start working your way up, because as you can see, once you get through this first assignment, 600 quid is not a lot, and the value to buy into it is not a lot. Prove your skill. You've then got a £4,000 account for your initial investment of 385. So that would have been recouped. And even if you were on the lowest value each time of 50-50, you are making incredibly good money as you go up that ladder. Okay. But the payout splits, they do change, and they will adjust it as you get better. Okay. And the way it works is, as soon as you are sort of qualified, shall we call it, there's a button comes on your dashboard that says profit payout. And as soon as you have $150 that you can claim, you just press the button and it pays you. And it pays me. I do it at the end of every month. Just go click, pays me what I'm due. Well, it actually pays me what I want to be due, because I don't have to take it all if I don't want. I could say take half of the money and leave the other half in my account so I can increase my position sizes before I hit the next milestone. Again, it's about management. Okay, so happy days, happy days. I hope that helps you. Let's see, cheers. Yeah, 10 pips. Cheers. Goody gumdrops, goody gumdrops. Okay. You can. You don't have to take it out, Eric. You can, once it's there, it gives you the opportunity to take whatever you want. All right. So if you've got £1,000 in and your payout is, or I'll put it another way, it only ever shows you what you're due. It doesn't say there's £1,000, but you're only entitled to half. It just shows you what your payment is. So if you've got £1,000 in that balance, you can go, right, a little bit like what I've done with Morningstar and kind of showed you guys in the group this morning. You could take out a treat, £500, enjoy yourself, because you need to enjoy yourself for the work you've done, but then leave the other 500 to increase your drawdown, which will allow you to increase your position size slightly. And it just means that you can get to the next milestone that little bit quicker. Okay, so happy days, happy days. But personally, I've really enjoyed the process of working with the 5%ers, basically because they leave me alone to do what I want. You know, as long as I'm sort of bringing the money in, which is what I guess every employee is there to do, because that's the way I look at it. I look at it as if I work for them. So I follow the tasks, turn up at the desk at the same time every day, do the same homework every day, I record the same every day, and I repeat constantly, rinse, repeat. They let me get on with it. But if I was seen to be taking wild risks, because the program that I've just done, which is the freestyle, you don't have a stop loss, but you have a profit factor. And the profit factor is you've got to control your account. So it goes back to the beginning of the conversation. I have a risk manager watching what's going on. So you've got to control yourself all the time. Now, if you can get your head round all of this rule-based trading, when you trade for yourself, you find it a lot easier. Because the trouble with trading for yourself is sometimes you think, well, I can do what I want. Nobody's watching me. And you end up putting your whole account at risk because you're just being daft. Prop stops that. But prop can accelerate your own funds, because kind of going back to Eric when he's saying you can draw out what you want, it is something for you to think about. You go, right, I'm taking £500 out. I'm leaving £500 to increase my lot size in the prop. I'm going to have 250 for myself. So that's a nice night in a hotel or whatever you want. You might want something new, you know, some new outfit of clothes, anything. But I'm going to put £250 into my personal broker. So now what you're doing is you're using the prop to not only accelerate its growth itself, but you're also using the prop to fund your own funds. And at a cost of $385, your return on investment is huge. And you'll often hear me say this because I don't go for risk reward. I think it's stupid. I genuinely do. You know, and I don't go for percentage of trade either. I think that's dumb. And there's very easy reasons as to why. You don't follow common sense. You know, you will force a trade. You'll go, right, well, this one has to be a 10 pip stop, so therefore my target has to be here. And you'll hang on and wait for it. But what if it doesn't get there? No. Your stop, or your risk in this matter, investment, has to be where it needs to be. And if you've got too big a position size on because of that, well, you'll quickly eat 600 quid. So you've got to be a little bit common sense. And the profit is just what's on the other side of it. And the trade, before you do anything, has to be right in the first place. And that's why my consistency rate is so high. Because if it's not ticking all my boxes and I don't think it's right, I won't press that button. I only press it when I'm 100% sure. Okay, so there we go. Happy days. Correct, Eric. Correct. It can give you the opportunity to accelerate your own funds. It can pay you in the process. And you've also got, certainly sort of with these guys, if you go on the trading resources, which is up here somewhere, all of these different things. And then you've got the webinars and the various different live events. In fact, there you go. There's the last one, and it was me. Okay. So is that a little bit clearer for you on prop? Or have I just, I don't know. I find these sometimes a bit odd because I never know what you want. And I always try and put it into a spin that makes sense, but can also add value to what you're doing. Because trust me, trading is not about your strategy. It's all about what you do up here. And it's the homework that goes behind it. You know, your strategy is just the last part of the puzzle. Click. Okay. So let's have a look. See where we're up to. Yanis, diamond. Diamond in the rough. Well, I've been called worse. Well, certainly was yesterday. I don't know, but to be honest, I don't think they do. I've only ever come across it as MT5. Personally, I like MT5. I've got my head around it. Funny enough, I never got away with MT4, but I quite like MT5. Maybe I'm just weird. I don't know. But there's nothing to say that you can't monitor what you're doing on a TradingView chart and then go to the 5%ers if that's the way that you like. Because I use IG as my primary sort of account. I always have. That's my wage account. And I do all my analysis on there. Because for all the levels or the sort of value you see on the left, right hand side might be different. The actual movement of the chart is identical. So you can analyze wherever you like, as long as you know what you're looking for. Okay. And for me, it's always a level. And then it's a momentum ignition from that level and targeted appropriately. Okay. So happy days, happy days. So, okay, Steve. Well, happy days, great session. Okay. The alternative of risk reward is ROI, which is what I do. ROI is return on investment. And what it is, see, risk reward, and I'll just kind of put this into context. Think of it this way, all right? If you start in the middle and you go 1 unit to stop out, but 3 to target, which one has more chance of being hit? It's that one, all right? And that's why risk reward fails. Because the chances of you timing the market to the bottom, or the top that matter, is very slim. Okay, it's very, very difficult to time it. There's the old saying, the trend is your friend. Everybody knows that. But there's a little bit extra to that saying. The trend is your friend till the bend at the end. And what that's trying to explain is getting out at the very top is incredibly hard, and when it turns round, it will rocket back aggressively. Okay. Well, what if it only got to 2.5 and you're targeting 3? It's going to rocket back and take your money away. So the alternative for me is ROI. I will start in the middle, which is roughly 1 to 1. Okay. And I am looking to invest, not risk, invest X amount of money into the market. Now that might be 200 quid or 400 quid or whatever it is, right? But then I'm looking to get a percentage gain from that investment. Now, if I put £1,000 into the market and I say I want a 10% gain, and I get £100 on this side, I have made 10% of my money. But the risk factor, because it's far easier to get here than it is to get way back here, is better. And this is all part of forward purchasing, something that I'm talking about with Charlie earlier on. Now, there's another way around that as well, because you also need to increase the return rate, the value you're going to get, and you also need to reduce the exposure at the same time. Now, that's a process called Scruffy madness, and what that is knowing what your maximum position size is and then staging backwards by breaking that position size up. And what happens is, not only do you find that you have less exposure, and I proved it, I've gone through it and I've done the maths for the guys, your exposure reduces to less than what you would 100% at market, but the upside is infinitely greater, and your exposure, if you only triggered a couple of the orders, is minimal. So it's a strange way of looking at it, but if you understand it, it makes perfect sense. So I hope that kind of answered it in a strange way. But good shout, Jace. All right. Ninja Trader. Yeah, I'm not too... I've never used it, so I can't really say anything, to be honest. Already have. Just one of them things. Yes. So you can analyze on anything you like, Loretto. And then you just pull up your MT5 and put your order in. Very, very simple. So. Right. So let's have a look at Stephen's question. If you're trading in the right direction, you can't lose as long as you get in near the top and bottom. Do you agree? No, not. It depends on the context. It's always I often say if you've got the direction right, it'll forgive a bad entry, and it will. Okay, so your direction is king, but there's direction and there's direction. You see, and I've seen it where they go right. You have to have a 200 moving average. Down it goes. If it's below, I'm only selling. If it's above, I'm only buying. Well, what if the price is massively away from that 200 moving average? Then the actual direction, for all you think it's down, for the day could actually be up. So direction is quite an important subject. And I spend a lot of time looking at the markets to make certain I've got that right. And then the way I look at it is I third it. You know, because I'm not looking for the bottom third, I'm not looking for the top third, I'm looking for the bit in the middle. And I derive this from an ATR. And basically the bottom third is somewhere to get in. The middle section is somewhere to be paid. And the last section before the market turns is get out. And I just break it down like that. But if you can catch a top and bottom, result, but it's very difficult. Okay, it's expensive. What is? I don't quite follow. 5% is personally, I think they're probably quite cheap. Not rightly sure. Okay. Excellent, Seth. Thank you. You're very welcome, Ian. You're very welcome. Let's have a look. Eric, I realize my weak point is taking the right trade by stop loss and trouble. Scruffy madness gets you out of trouble a lot of the time. Oh, cheers, Larry. Yeah, I've never come across a ninja, so I really can't comment on it. Confessions of a Trader. You're damn right. I've done it all. You know, I've done this 15 plus years, and I've been on every journey that you guys have been on. A lot of the time through my own foolhardy arrogance, certainly when I was younger. That probably came from sort of working in account management for a pharmaceutical company, a medical company. It was high pressure. You had to maintain the sales. You had to get the accounts won all the time. And so it kind of breeds a competitive nature. And it's probably a bad thing, certainly for a trader, because you're not competing, you're working, you know. And the one thing you don't want to do is try and win all the time, because if you're going up against the market will beat you every time. It really will. You want to just get in, get out, and sit back and enjoy the fruits of your sort of labor. But if you keep trying to do it, eventually it'll hit you. And when it hits you, it'll hit you hard. So being competitive can be bad. All right. It was something I had to beat out of myself. And it only got beat out of me when I lost a colossal amount and it wiped an account out. Never did it again, but didn't half teach me. So there we go. 800 quid for Ninja Trader. Wow. I hope it's good. So there we go. Anything else, guys? Are we happy? Has it made any help to you? I genuinely hope it has. Okay. Time to jump. Happy days. You're not jumping into a swimming pool, are you, Yanis? I bet he is. He does that. It's horrible. So, happy days. Happy days. Okay, let's have a look, see if there's anything else. Okay. There's a link for everybody if you want 5% off. Let's have a look, see where else we're up to. Okay, so everybody's happy. Yes, right, last bit of advice, if you could show. Yeah. Just fire away, matey. I'll do what I can for you. Good stuff, guys. Good stuff. Vinny, I'm coming your way soon, so you better get the beers on. And that's Charlie as well. Okay, I'll see if there's anything else, because GS asked and I haven't seen it yet. I'll remortgage that. I don't drink that much. Well, I do actually. It's another thing, you see. I'm over 50. I am a big guy, not like Finney. He's about that big. He's like a little hobbit. So it's only natural I drink more than you. Well, actually, I don't, because you're like a little pisshead, aren't you? Any advice from your experiences? Okay. Right. If I was just to leave you with something to think about, somewhere in this, and I can't remember, I started talking about a 30-day challenge. All right. And that is there for one reason: slow you down. All right. It's not a race, it's a marathon. You're in it for the long term. Okay. And if you are compounding and it takes a year, a lot of people think a year's too long. But when I was serving my time, that was like a 3-year, 4-year apprenticeship. So you're essentially doing a year's apprenticeship for a long-term gain. So the advice I would give is less is more. If you take 5 trades in a day, do 2. If you put on £5 a position, but you find that you're losing, do £2.50, half it. And then trade only the best setups, grade them, go through your journals and go through them, and don't look for the winners, look for the losers. Concentrate on what goes wrong, and then you'll understand what the conditions were at that time, what your frame of mind was at that time, and then why you took the trade in the first place. And you might find that you're using a moving average cross in a range bound situation, and then you'll kind of get to know what's going on. And then finally, I only have 2 strategies, only 2. One as a day trade, one as a swing trade. That's it. And master them. And if you're finding that you're struggling mastering them both at the same time, have one and master it. And once you've mastered it, you'll find you'll be able to move on to the next one, so forth and so forth. So that's kind of the advice. Less is more. All right. So there we go. Been banging on an hour or so. If there's any more questions, now's the time. Otherwise, we're going to wrap it up. And yes, Finny, I'm going to be cracking the beer, and I am going to have a barbecue, and I am going to be in a bonny state in the morning. Because I don't trade Monday mornings, I recover. Okay. In the Discord, there is a tab called Tools. They're all in there. And if you still can't find them, just drop me an email and I'll send you one. It's not a problem. And I think that might be it, boys and girls. I think that might be it. I hope it's out. Unicorns. How much does it cost to join the Discord? Right, okay. It starts at $1.99 and then it goes up to whatever. If you go in the Telegram, I did set up a free Telegram. Just ask the guys what they think and you'll be fine. Happy days, happy days. I'll try and keep it as best I can. It's there for being a shared community rather than, I don't believe in teacher, mentor or anything like that because I'm not. I'm just one of the guys that happens to do a job and I'm willing to show you, but I wanted a clean area that was safe because I was sick to death of God knows who trying to sell signals and this, that and the other. So happy days. It's all come and go. Right, are we good? Everybody happy? Yes, no. Can I go and have a beer now? Is that okay? Mental more like, yeah, that's the one. I do I do enjoy myself with well, I'll show you something as a final thing. All right, I'll have to put my big screen back on. All right, just as a parting thing. Pull up my private plate because I haven't put it on Bruiser yet. If you want a motto in life, here is a good one. All right, that is right there. It's on my personal number plate. Today is the best day. So, happy days. Okay. So there we go. I can live with that. All right. So, have yourselves a good weekend, guys, or what's left of it. See you all tomorrow. Trade safe. And always remember, do what you love, and the money will follow. Catch you all later. I'm going in the garden.